it's Adil bringing you a review of the FTSE 100 for tomorrow's trading, which is going to be the 19th of February 2015. So this is a midweek video. Unfortunately, I've not been at 100% ever since the half marathon on Sunday in Wrexham. Just trying to recover and obviously get my energy levels back up, given the fatigue that I was suffering. Okay, so back at the FTSE 100. So where art thou heading, oh FTSE? Okay, so we'll try and decipher this. Let's start off with fundamentals, as you always know. We started off in the morning with regards to the news flow and the reaction in Asia. So basically the Hang Seng was higher. Shanghai seems to be going on the verge of a New Year's holiday, so we can't really take that into consideration. And the Nikkei was up as well. Okay, the FTSE itself finished flat. Euro stocks was higher. Stopped me out minus 30, by the way, so minus 30 points on the Euro stocks today because I got caught in a short squeeze. CAC obviously moved higher. Deutsch, which is the DAX, obviously moved higher. Swiss market higher. IBEX higher, and obviously Athens higher. Now the reason why I got stopped out in the Euro stocks was because of the actual agreement, or the loan agreement that was signed, or the extension that the well, basically it was a U-turn. Initially they came out stating that they weren't going to fold, and they had a mandate given the politics, etc., and all of a sudden within the next 60 minutes the U-turn and actually applied for the extension. Okay, so the market short squeeze on the concerns being alleviated with regards to Greece. Okay, and we had a short squeeze in Europe, obviously given the fact that we've got QE regardless, and given the fact that the Russia-Ukraine ceasefire more or less seems to be holding, although there is increased rhetoric on both sides now, and the fighting still continues. There still seems to be some sort of agreement there with regards to Russia and Ukraine. Okay, so overall, feel good factor from Asia. Okay, because they expect some sort of agreement to be signed and obviously put into some form of concrete proposal or formation. Call it what you want. Basically, the concerns are being alleviated from Greece, Russia, Ukraine. Concerns are being alleviated, and everything's hunky dory. Okay, because we've got QE, we've got the central bank put. Mr. Draghi put, okay, basically helping the markets scream higher. Okay, and given the fact that we had the BOE as well, so if you add in the fact that we've got the BOE, now yesterday's inflation data, as we all know, was very tepid, which it's in it of itself had Mr. Carney talking about potential rate cuts. I mean, we were all talking about a rate increase, let alone rate cuts, and we also had the talk of potential QE to fight off deflation. So all of a sudden, we've got this talk of interest rates, obviously moving higher, to a talk of interest rates going down. So that's a U-turn. Hence the reason why the FTSE is at where it's at. It's currently approaching the 6,900 and potentially breaking out higher. Okay. Then obviously today we had the minutes from the BOE. The minutes from the BOE were overall dovish, and we also had the unemployment rate drop as well. Now the front page of the Financial Times, I mean, states not the front page, but basically the economy section. UK employment rate matches record high. Obviously, split zone monetary policy emerge. Unanimous view on holding rate. Masks diverging outlook for rise. So basically, they all want to go into a neutral camp, stroke dovish camp now. More people found work in the UK last year than any year since 1988. A boon for the coalition. And also the factor as well was the rise in real wages. And real wages inching higher after a painful 5-year squeeze. So these are all signs of a potential hawkish monetary policy, because if you have real wages rising, you have unemployment rate dropping, this is all good news. Yes, okay, so therefore the economy should be reviving itself, and therefore inflation should be ticking higher, even though we've got a temporary blip with regards to commodities, etc. And obviously that's not the case. We also had deflation or potential weak inflation out of the US as well. So again, this is all basically easy monetary policy. So when you have weaker inflation, we can't go ahead and obviously increase interest rates. This is basic economics. Okay, you can only increase interest rates. Well, one of the reasons why interest rates are increased is to fight off deflation. So for a fight off inflation, fight off inflation. So the fact that yes, we are having, this is a Goldilocks scenario where we've got low inflation and higher growth and higher real wages. So this is a Goldilocks scenario. This is a perfect scenario for the markets to obviously propel higher, especially in the FTSE 100, and to make and break new highs. Hence the reason why I'm swing long on the fundamental analysis service. For those of you that want to join the fundamental analysis service, it is free. Okay, all you need to do is either send me an email and I'll add you to the emailing list, or alternatively you could just keep checking up on here. I'll be posting all my swing trades on here. So basically I've got the FTSE and the Kiwi longs at the moment. So as you can see there, FTSE swing long from 6873 and the Kiwi long that I took today at 0.7520, which is doing well at the moment. So watch out for those two. Or alternatively, if you want to do day trading, then I also have the live analysis service, which you can read up on, where I share my trades on a daily basis. I give you my entry, my exit. There's a video explaining how it operates, and basically I give you an insight from a technical, fundamental and intermarket analysis perspective, all designed to aid you in your learning and understanding and increase your understanding, obviously empower you as traders, so eventually you can trade independently one day. Okay, now we've got the S&P 500 and the Dow themselves finishing more or less flat into the afternoon session. The Dow is slightly down and the Nasdaq up as well. So overall a mixed session, and we'll see exactly where that's going when we hopefully, if I can do a US market analysis video. Okay, so let's look at the technical factors now. So given the fact that we've got a dovish BOE overall, which obviously is positive for stocks, okay, and then we have stronger economic growth in terms of unemployment rate dropping, real wages increasing. That leads to higher disposable income, which obviously helps the consumption part of the economy, but as we all know, 70 to 80% of GDP is consumption. So therefore that should in theory propel the stock markets higher. Okay, right, so let's have a look at the actual charts now. So the daily chart itself, we're just consolidating and we've broken above the resistance there. Okay, so basically we've consolidated above. We did attempt to test the market, but the market quickly rejected that and closed above, and that's a bullish sign. So given the fact that we've held the upper body of that green candle, is very, very bullish from my perspective. Okay, now we can look at the smaller time frames. Let's just have a look at the FTSE 350 before we do that. So if I just confirm it from the FTSE 350 perspective, I mean, we've got the FTSE All Share looking very bullish, as you can see here. We've put in a double bottom, and now we're looking for a potential reversal. Okay, so this is going to be very, very interesting. Now you also have this potential inverted head and shoulders formation as well, so one can certainly observe there. So your left shoulder, then you got your head, and obviously your right shoulder, and off we go to the races. So this certainly seems like it wants to go higher, okay, with regards to the FTSE All Share Index, and overall it's very, very bullish. And from a larger time perspective, you can see the left shoulder there, head, obviously putting a head there, and obviously right shoulder's going in, and off we go to the races. So overall it's looking bullish. Okay, the FTSE 350, you'll see that FTSE 250 is already broken out, as you can see. And also one more aspect with regards to the fundamentals is that we had talk of the currency, or the basically the BOE joining in on the currency wars. Now there was a by Mr. McCafferty stated that if sterling continues to rise, would be something to keep an eye on. Bank of England's McCafferty says sterling strength an issue to keep an eye on, current levels slightly uncomfortable. Okay, so given the fact that sterling's at the 1.54 level, and he's considering that to be uncomfortable, okay, so he's obviously joining in on the currency wars. He's obviously joining in on the currency wars, okay, and he's basically attempting to talk down the currency, which in itself helps the export market, and overall, obviously, as you know, is bullish for equities because it increases exports. Okay, same thing with the FTSE 350 in a daily chart breakout. Okay, so I can't argue here or stand here and argue that this market is going to move lower when I have charts like that before me. It's very hard. Okay, so certainly looking for a propel or a move higher. Now let's have a look at these smaller time frames now, given the fact that we've understood. Now let's have a look at the pharmaceutical sector. This is something that we're going to be watching out for. 60-minute chart, it did put in a potential double top today, so again that's going to be something that I'm going to be observing with regards to it going forward. The banking sector, Okay, the banking sector itself is in potential triple top resistance again. If we need the FTSE to go higher, then it must break that resistance barrier, resistance zone. Okay, so bear in mind HSBC data or news today. So again, that certainly needs to be something to take into consideration. So watch out for those two potential double tops. Okay, the oil sector itself, we did potentially attempt to make a reversal today, has been shot down. Oil price is at $50 now. So potential H&S is in the works, and again we'll have to see exactly how oil plays out overnight. Now, one of the factors against oil going lower is the fact that the Fed was, or the FOMC was very dovish. Okay, given the fact that you have a weaker dollar, therefore that should in essence help oil or help commodities. Okay, it should help commodities move higher. Okay, so very important to observe that. That's going to be an important factor. And also, given the fact that the even though the oil price is falling, will the falling oil price be offset by a dovish basically central bank? And usually central banks dictate a price action regardless of what the other variables can be. 60-minute chart of the retail sector, again potential double top. So it's basically a dovish monetary policy that will potentially break out all these resistance levels. So this is something that certainly needs to be taken into consideration. Okay, and this is very important from my perspective. Now let's have a look at these smaller time frames now with regards to the FTSE. Now it is a mess at present, so let me try and clean this up and try and get a better understanding here. Okay, so those levels have been negated, so let's get rid of those for now and see exactly where we stand. Okay, so drawing my gap levels first, as I always do, because the gaps are very important, folks, especially when it comes to technicals. Very important. Okay, so they give you pivots basically. Okay, so we have a support level down here, we've got this key resistance level here that we need to be certainly needs to respect. Given the market hasn't respected that, we're going to delete that for now then. Okay, so we're into this zone, we've got the 200 MA. Okay, so you've got potential double bottom support there. Okay, so what pattern can I see at this very moment in time? I can see a pattern here developing. So you've got a left shoulder, double bottom head, right shoulder forming here at 6890, then obviously looking to propel higher into the 6920 and potentially higher. So that's something that's going to be interesting. Or alternatively this could be a H&S formation. So you've left shoulder here, you've got the head that's formed here, provided we don't get 6920 again, right shoulder, bang, down we go. Okay, so again that's a possibility as well, because as traders, I mean, we can't be obsessed with one side of the market, even though yes, I understand, and I'll be the first to, as you already know, I'm swing long the FTSE, and fundamentals telling you that this FTSE is screaming to go higher. But as day traders, it's totally different. It's a different ball game. We have to follow the bias, the sentiment, and the movement in the market. So there's two patterns that you know, and certainly keep an eye out for tomorrow. Okay, now 60-minute chart. Basically, why was I bullish today? So the reason why I'm bullish today, we broke out. Okay, so I'm just drawing my trend lines here. Okay, so obviously we've broken out of this this wedge. Okay, ascending triangle, call it what you want technically. Basically it's a breakout, so therefore I was looking to buy this breakout, which obviously has to be respected given the fact that oil prices did touch $54-55 today. Obviously that's reversed quite powerfully, so it's a different story altogether now, and it certainly looking bearish as we speak. So it depends on how oil prices move higher. Now we are touching the $50 level at the moment, so we'll see exactly how that plays out. I mean, at the moment I've got light crude April around the $51 level, so we'll see exactly how the market reacts with regards to that. Okay, right, very important. So from my perspective, still bullish on FTSE, given the fact that we are going to hold this 6890 level going into tomorrow. Obviously if that fails to break, then you are going to test the 6840, 6850 level and come back in within this diagonal trend line. Now we do have support here. Here we go. We've got support in this zone here, 6850, and obviously 6830. So again, we'll see if oil obviously continues to fall, then that's obviously very bearish for the FTSE itself, and that may well cause the FTSE to reverse. So again, that certainly needs to be respected from that perspective. Okay, folks. So certainly keep an eye out for that. Okay, now one of the reasons why the FTSE was unable to propel higher today was Vodafone. That was the main culprit. If you look at the stock of Vodafone, which I'll bring you up now, I can show you the mobile telecom sector first. You can see there quite a substantial sell-off. This move lower here, okay. And if you look at a chart of Vodafone, you'll see that Vodafone was a male culprit, given the fact that it's one of the top 10 heavily traded stocks. That's your sell-off, okay, and that's what caused the FTSE to fail from my perspective. So ideally, we need to see stabilization in Vodafone tomorrow as well, or the telecom stocks, and also oil, okay, in order to be bullish FTSE. Now I'll declare that I am long FTSE, and my stop loss is at 6872. So we'll see exactly 6872. Yes, we'll see if that holds. If I get stopped out, then I'll have to reassess and see exactly what's happening with regards to this market. Especially, like I said, from a fundamental perspective, it's screaming to go long. That's why I'm long on the fundamental analysis service. But day trading is a totally different ballgame, and like I said, it's dictated more towards the price of oil, which is the way in which it's heading at the moment. It's on the verge of support at $50 and $51. So that's something that I'm going to keep an eye out for. But Vodafone certainly did break this key support level here. And the next potential support level on Vodafone at the moment really is going to be around this region here. So we'll see 221, potential support here at 223. So we'll see exactly how this plays out. But that's basically the FTSE 100 for you folks. Okay, so watch out for those two patterns that I mentioned on these 10-minute and 60-minute charts. Very, very important. Inverted head and shoulders. If oil prices can make a base and propel higher, and Asian markets propel higher, and provided there's no other shenanigans from out of Greece. If obviously to the contrary, then obviously we are going to fall, and this H&S formation certainly comes into play. I mean, if you use the head, it's at 6920. Take it to the neckline around the 6860. So you're looking at a 60-point drop. So you're looking at 6800 target minimum on the FTSE 100, and 6800, I mean there's 6820 down here at support, and then obviously you've got support at the 6790 region. So again, that's going to be very interesting. Or alternative, like I said, we have an inverted head and shoulders. So if the US markets continue to squeeze higher, then we have this inverted head and shoulders that goes back up to 6920 and potentially higher based on a dovish BOE. Okay, so that's basically where we are. Again, it'll be oil and watch out for Vodafone, two key components for tomorrow's rally, and a sustained rally that is as well. And like I said, a lower dollar generally helps commodities, even though oil price is moving in the opposite direction as we speak. But gold and copper certainly have made a breakthrough on the upside. So we'll see. Again, markets dictate. I mean, I can do all the analysis I want. Okay, I can give you all the potential scenarios. It's basically the market decides which way it wants to go, based on news flow, based on the market participants in terms of the buy and sell side. Okay, folks, so that's enough for me. Risk on, risk off, wax on, wax off. Goodbye now.